Chart of the day today is Nike because of that news that came out late yesterday. John Donahoe out. Elliott Hill, a company veteran, is in as CEO. Stock year to date is down more than 20%. I got any buyers here? Anybody who was looking at this stock and was waiting for some sort of transition? No?
I'd love to, frankly, but, you know, it's the first time I can recall in all the years I'm following Nike that there's actually true sustainable competition from on cloud. Hoka, I think, is more of a trend because it's tough to keep that kind of look going. But I think it opens up the door for other competition as well. And that's,
I mean, still like the big behemoth. Right? Let's not make it out. Let's not make it out that all of us. I mean, you don't think any of this competitive stuff is overblown? I mean, maybe there were some missteps on Nike's part. Lack of it itself.
I don't think it's the first thing.
I think lack of innovation.
I think, but what it shows that Nike's brand really has to be refreshed because it's been the same shoes, different colors, you know, and some slight modification. So you just got to refresh at some point. Number one. Number two, the cost of bringing in athletes has gotten much more expensive. So I just think at this point that you really need innovation and new ideas.
I think if you're buying the stock today, you're buying it on the premise that this could be something similar to what we witnessed with Chipotle and Brian Niccol. And I don't think that's the possibility here. Elliott Hill is a very qualified executive. And I'm certain that, you know, there's going to be execution and he'll take the company in the right direction. But it's not the similar type of setup that you had with
it's also a longer road to turning around a manufacturing company with huge supply lines and design than a fast food company.
So from a just straight up fundamental analysis perspective, here's where we're looking at it. We're seeing increased competition, slowdown in athleisure wear, pressure in the Chinese consumer, and a stock that's trading at 25 times earnings with no earnings growth over 4 years. Super uncompelling.
Too expensive is the argument to make. Josh, how do you analyze Nike here?
I have to agree with what everyone said on the desk. To Steve's point, they're still selling Dunks Air Force Ones for about $110 a piece. That's basically a staple at this point. It's not in fashion. It's not out of fashion. It's just like an evergreen thing that they can do. The Jordans in the secondary market are not selling for what they were selling, which has like a ripple effect, and so the new Jordans are less in demand. And then what comes next? It's unclear. They really haven't innovated a whole hell of a lot. Even their best signed athletes are all aging out. Like, do kids want to buy LeBrons right now? Not really. What about Kevin Durant? Is anybody lining up for the new Durant drop? Like under the age of 12? I don't think so. So it's a tough time for them. You've got this leadership transition. I don't think the guy's in any rush to make changes. So next quarter's not going to be the turnaround quarter. And Jenny nailed it. Why would I pay 25 times forward earnings for a turnaround story? Nobody does that. So it's kind of in a no man's land. And that's why the rally already fizzled out. Everybody sees the same thing.
All right.